Hello, 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 everyone. Good afternoon. I am Patrice Malloy. We are back for our second episode in our series of Building Wealth by Design and Not Default. I would like to welcome each and every one of you today. I hope that you had a fantastic holiday. You got to spend time with your family and that everyone is doing well. What I'd like to do is just jump into this. So, we're going to talk about mastering the tax code to maximize your millions. So, again, this is our series. It is how to build wealth by design and not default because we are proactive in our approach in our journey to wealth. We are not reactive because that is how you make mistakes and that is how you leave a whole lot of money on the table. And our goal and our mission is to help you maximize, make, master, and multiply your money so that you can build unapologetic and unshakable financial legacies for your future, for your family, for your children, and also to be able to live the life you desire and leave the impact that you desire as well. So, we're going to talk about how to master the tax code to maximize your millions. And one of the first things I'd like to talk to you is about a new uh, topic that came out from the IRS. Now, technically, the topic is not new, it is about Zelle and bank account payments that people are using. I find that a lot of business owners are leveraging things like Zelle to accept payments as opposed to using things like tax and accounting software, but that's okay. But here's the deal. There was a directive from the IRS in 2021 that said that if you made in excess of $600, that you would have to report that as taxable or earned income. Now, they have recently changed that to $5,000, and that is going to take effect in 2025. So, what does that mean? Beforehand, if this actual law were to come into place or this the regulation, excuse me, were to come into place, that means that you would have to report anything that came in and out of your bank accounts, Zelle, that was for business. So sale of goods and services, sale of any consultancy fees, sale of any kind of work that you're doing, that you would have to report that to the IRS. Now, what's going to happen is that if it is in excess of $5,000, you have to report it. Now, if you have any kind of merchant processing, things like Stripe, PayPal, any kind of those types of platforms that you're accepting payments in, if you made in excess of $20,000 or you had in excess of 200 transactions come in throughout that year, you were required to report that as earned income. Now, that is still in effect, but again, that's not going to happen until 2025. So let's just put that in our minds and make sure that if you are using Zelle, I mean, there's nothing wrong with it, I'll be honest with you, but it is so much more efficient and effective. And it bypasses the whole commingling of funds between personal and business bank accounts. If you use a business bank account, a third-party merchant processor, and or something like a QuickBooks, a Zero, a Wave, a bench accounting type of software. So I highly, highly, highly recommend doing that because we want to talk about compliance, which is very important. If you're running a business, the expectation is that you are compliant with your bookkeeping, your reporting, and your financials. So let's just keep that in mind as well. Now, some of the things that we want to talk about are some strategic responses to these things. Now, you definitely want to be able to leverage those accounting softwares, like I mentioned. So, if you do have QuickBooks Online, if you do have QuickBooks Desktop, you do have Zero Accounting, whatever it is, you definitely want to make sure that you are tracking each and every transaction that comes into your business. How do we track this? We do our monthly, at a minimum, I would say, bookkeeping processes and tasks, okay? Which means looking at everything that's coming into your dashboard, categorizing those transactions, and then doing your financial reporting to make sure that everything that's in your QuickBooks or whatever dashboard coincides and completely aligns with your bank statements. I think a lot of people have this misconception that as soon as the transactions come into their accounting software, that that's all they have to do. That is not true. That's only part of the equation. You have to take those transactions and make sure that it balances with your bank statements. Okay. If there's something off, you have to fix that to make sure that both registers inside your accounting software and the bank statement that's been supplied to you are exactly alike. Let's just talk about that. So let's make sure that we do that. We want to make sure that we are tracking these things so that we have accurate and timely financials. Another misconception that we have is that we don't have to take care of these things unless we're doing something like applying for a loan or we're trying to get funding. The reality is you can't do that anyway if you don't have those items in place. If you wanted to do things like take advantage of the PPP and all of the extra money that was given back in 2021, 2022, you had to have your financials in place because people needed to see that you were trustworthy, that you were not high risk if they were going to give you money to continue the operations and the maintenance of your business. So you always want to make sure that you have these things in place, regardless of what's happening in the economy, regardless of what's happening financially, because there is going to come a time when you're going to want to leverage other people's money, OPM, to be able to scale and grow your business. I highly recommend doing it now before you need it because it's when you need it that it's the most challenging and most difficult to actually get access to those funds. So set yourself up correctly. Make sure that you have a business profile. Make sure that you're able to have incidents reported to those crediting agencies each and every month so that you were able to build yourself up as someone who was trustworthy and who was low risk if and when the time comes when you want to leverage things like those business credit cards, those working capital funds, if you have lots of inventory that you need to do, if you want to be able to leverage loans, if you want to have things like money for gaps, because there will be times when business fluctuates. Business always fluctuates. And you want to be able to make sure that you can pay yourself and pay your employees and your contractors and all the other people that help to make your business run on a day to day basis. So, those are some of the other things that you want to do. Now, the first thing I mentioned was this new threshold adjustment. So, in order to be able to proactively make sure that we're doing that, again, you can still leverage the Zelle if you want to. You can still do Cash App. I do not recommend it. I do recommend, like I said, getting those accounting software set up and then put into place so that you have that compliance requirement checked, right? So at the end of the year, you don't have to do a whole lot of hustle and bustle and trying to figure out what you need to do and making sure that you have properly accounted for all the income that's come in. You have it right in front of you in your dashboard, and you could just create those financial reports and send them to your tax professional. So I highly recommend doing that. So that is it's a priority. Okay. If you want to run a business that's legitimate, you want to make sure that you are in compliance with all of the rules and regulations of your state and federal authorities. Okay. Now, the other reason why you want to have this in place is because it's automating. And when we typically automate these things, it means more efficiency. Now, a lot of times that we have trouble if you are doing manual transactions is user error, right? You may not have had the formula correct, or something didn't come in properly, or you didn't copy and paste or translate or whatever, transaction appropriately. So you're off. And if your register is off, then that means that all of your other financials are off. Your profit and loss statement is going to be off. Your balance sheet is going to be off. Your statement of cash flows is not going to be accurate. And it could either report income that's too high, which means you have to pay more tax on, or report income that's too low, which means you may not qualify for those things that we talked about, like the um, the funding, the business credit, the loans, the working capital, et cetera. So you always want to make sure that you have an accurate accounting of your financials, regardless of what type of business you're in. Okay. Now, again, you want to keep meticulous records for financial transparency, to make sure that you're operating in integrity, to make sure that if something happens, you are audited for whatever reason, you're able to quickly give the IRS agent the information and the documentation that they need to make sure that they have a quick and smooth review of your tax returns and that they're able to give you, a passing grade. Because a lot of people don't understand that too. If you are set up as a certain entity, you are more likely, like a sole proprietor, to be audited by the IRS. If you have your entity structured as an LLC or maybe even an S corp, the likelihood of being audited reduces drastically. So there's another point that we want to bring about. So again, we talked about when we opened this conversation of how to master the tax code to maximize your millions. One of those things is making sure that you have your financial reporting down packed, right? There's no question about what's coming in and out of your business. Two is making sure that your business is structured appropriately so that they're not looking for you and they're not checking for you to do any kind of audits, right? They're not raising any red flags because you are a sole proprietor and you have $500,000 come into your Zelle account or your Cash App account, but you're only reporting $100,000 of it, right? So these are the types of things that we want to be very mindful of. And I highly recommend reaching out to a professional that can walk you through these things, that can help answer your questions, that can guide you, that can help look at your back office, right? Do a diagnostic review, whatever it takes to make sure that you're doing things appropriately and help set up things like rules so that if you do it yourself, you can automatically make sure that transactions are categorized as an expense or income or a liability. Because that's another thing that I'm finding. People are not categorizing their transactions appropriately and their financials are all over the place. So if you are not confident in that, which is okay because it's not everybody's yours, right? Connect with somebody who is. Connect with somebody who does that on a day-to-day basis, who has expertise and experience in that, and that can help make your life easier by making sure that your financials are accurate. I digress. So again, you want to keep meticulous records for that financial transparency in the event that you are looking for money from someone else, and then the event that there is some sort of audit, especially if you're a nonprofit organization or have a nonprofit arm. You have to have your transactions in order. Any charitable contributions, any giving that's coming into your organization has to be tracked, and you have to do the bookkeeping as well as file those tax returns, or else you cannot continue to operate your organization. So again, be mindful of these things. We can't say we didn't know because I'm telling you about it, okay? If you have questions, feel free to leave me a comment, shoot me a DM, send me an email. My information is easily accessible, and then we can talk about how to get you on the right track. Okay, so we talked about what is taxable income. So anything that comes into your business as a sale, as consulting, speaking fees, anything like that. But what's not taxable? We need to make sure that we clarify. So if you are using Zelle, Cash App, etc., for things like paying your family members back or sending them money for like your rent or your mortgage, etc., these are not taxable events and they do not count, which means they do not need to be reported on that 1099K that I mentioned initially, or when you're doing your taxes. Okay. Some other things that don't have to be reported. Purchases for personal use. So things like jewelry. Say I bought a necklace, a gold necklace in 2022 for $150 in 2023, which is what we're coming to the end of, and we'll have to be filing taxes for next year. The value of that gold has fallen to $50, and I decided to sell it. That means that I took a $50 loss, which means it's not reportable income. It's not taxable because I sold it at a loss. This is similar to some of our brokerage accounts, right? So if you have stocks and bonds and annuities and things like that, we call that tax loss harvesting. So if you have purchased, stocks at the beginning of the year, you held them for the full year, by the way. And when it's time to sell them at the end of the year, you have a loss, you can write that off. Now, again, there is a maximum of $3,000. You want to talk to your tax professional and make sure you have everything written up appropriately and accounted for appropriately. But there are ways to help offset some of the income that you have in your business by doing things like that, by selling things at a loss, by using that strategy of tax loss harvesting to offset some of the gains that you had in your portfolios throughout the year. So these are obviously more complex, but these are some of the things that I just want to throw out there for you because you should be using these things if you're trying to build wealth. Okay. The reality is you can't save yourself to wealth no matter how hard you try, no matter how much money you have. If you're not multiplying your money, you're not building wealth. So I just want to throw that out there too. So that is the third thing. So again, we talked about making sure that we are reporting things accurately. We have financials that are compliant. We have financials that are able to be quickly and easily reachable in the event that we have an audit, in the event that we want to do things like apply for business credit, funding, working capital loans, etc. We also want to make sure that we are leveraging the tax code to make sure that if it's not an actual taxable event, that we're not reporting that. That's another way to leave a lot of money on the table if we're not clear on what needs to be reported and you're reporting things, like we said, like the sale of jewelry, even though it's a loss, like the sale of um, some sort of property, right? That was sold at a loss. If you're looking at gifting, right? Charitable contributions, those are not taxable either. If you have a liability, like a loan, that's not considered taxable income. So we want to make sure that we're not reporting that as taxable income. If you have given or you've been given, excuse me, a loan to do something to grow your business, that's liability. Yes, you are using other people's money to leverage so that you can grow and scale your business. But the reality is you have to pay that back. And most times, more than not, you have to pay interest on that. That is something that you need to leverage as a tool on your taxes. You get to take advantage of the interest paid, not necessarily the payment, the repayment, but the interest on top of what you owe that you get to take advantage of. So again, making sure you have the right things in place is so important. It's so key because that's how you maximize your millions. That's how you make sure that you're not leaving anything unnecessarily on the table. Because money lost, right, is an impact to your ability to build wealth. So let's just think about that. So again, we just want to make sure that we're making sure that everything that we're reporting is accurate. We want to make sure that we are using best practices for compliance. And we also want to make sure that we're partnering with experts. Why not leverage somebody who was spending time and expertise and training and licensing and education and all the things in a space and try to do it on our own when we don't have to, right? I highly recommend working with somebody who's a professional. Give that comfort to yourself. Have that ease of mind. Have that comfort of knowing that somebody who was doing it for us has the expertise in it. They know what they're doing, they know what to leverage, they know what to look for, and they're working on your benefit and on your behalf to make sure that, again, you are maximizing your wealth and you're not leaving money on the table. So work with somebody who understands these areas. So those are the things that I just wanted to talk to you about today. So again, the best way to master the tax code to maximize your millions. We're going to go more deeply into this because there's so many strategies that you can leverage in the future, right? Depending on how you're set up, depending on how you're structured, depending on the type of business that you have, depending on if you have mortgages or you have commercial leases and loans, or if you have children that you can hire or you have employees. There's so many different things that you can leverage to build wealth and to maximize what you keep in your financial ecosystem, as opposed to giving it away to Uncle Sam at the end of the year. So I really want to challenge you to think about your business. Look at your business, look at the way it's structured. If it's not a way that's going to protect you, like in limited liability corporation or company, at a minimum, you need to do some changing. You need to work with somebody who can help you restructure that entity so that you are protected on the personal side and then on the business side, because there's nothing worse than something happening in your business and someone coming for your home, for your 401k, for your children's college funds, etc. So do yourself a favor and protect yourself now before it becomes a challenge or a situation that you can't come back from. Okay. So that's what I want to share with you today. Again, how to master the tax code to maximize your millions, what you need to do to make sure that you're prepared for the upcoming tax codes and tax changes in 2024, 2025, etc. And then always staying on top of that. Connecting with somebody who understands these things and can help you work through this is the best possible thing I can recommend to you. Do what you need to do to be ahead of the curve and be proactive as opposed to being reactive. As always, I appreciate you. If you have questions, comments, concerns, send me a comment, book a call with me so that we can get on the phone and understand what's happening with your business and create a blueprint and a path forward to make sure that you're maximizing your taxes, you're maximizing your business revenue, you're keeping this money in your financial ecosystem, and you're building wealth. I look forward to speaking with you. Until then, y'all, this is episode 2 of the Building Wealth by Design and Not Default series, and I look forward to seeing you for episode 3. Talk soon.